In this video, I'm going to talk about a technique that most of professional traders utilizing in their tradings. This technique is called FVG or fair value gap. FVG provides insights into market sentiment and it often indicates that buyers or sellers were particularly aggressive. Additionally, FVG often act as critical support and resistance levels, and it will help in risk management, and also it can easily be combined with other indicators. At first, let me tell you about what does FVG mean in trading. Fair value gaps are imbalances on the chart that are confirmed with three candlestick patterns, and also there are two types of FVGs in the most of charts. The first one is bullish FVG. In a bullish fair value gap, the highest point of first candle or its upper shadow does not overlap with the lowest point or lower shadow of third candle. Between these 2 points, I mean the upper shadow of first candle and the lower shadow of the third candle, a specific gap will be created and market will retrace to fill this gap either partially or completely before continuation of the trend. Second type is bearish fair value gap. In this case, the lowest point of or the lower shadow of first candle does not overlap with the highest point or upper shadow of third candle. These gaps act as magnets and the market tends to be attracted and drawn to them, and these are one of the best signs in the chart that can help traders to make profit. FVG with the confirmed setup can be utilized for entering a trade in every financial markets. Also, both bearish and bullish fair value gaps have specific names, BISI and SIBI. BC stands for buy side imbalance, sell side inefficiency, and this is a bullish fair value gap, and we expect to go for long position after seeing BC in the chart. Moreover, CB stands for sell side imbalance, buy side inefficiency, and this is a bearish fair value gap, and we expect to go for short position after seeing these. And also after CB, most of the time market changes its trend to downtrend and the price gonna decrease sharply. Overall, there is three different levels of fair value gap. The first one is IOFED, that stands for institutional overflow entry drill. This is the case when price candle touches the fair value gap a little. For example, its lower shadow touches FVG. Additionally, next level is CE, that stands for Consequent Encroachment. This is the case when price candles return to the gap and it doesn't always fill the entire created gap and it just touches the midpoint of FVG and continue the normal trading flow. The third level is FVG Fill. This case happens when price candles retraces and complete the imbalance. After this level, most of the time there is two results that will happen. First one is when price keep its bullish sentiment and go for uptrend, and the second theory is when the price reject the FVG and go for downtrend. I also brought you several examples to grasp the information about how to use FVG in all markets charts completely, and also because it is so hard to digest all of this information theoretically, I think it is so essential to read and analyze a couple of charts by FVG. This example is from gold market. As I mentioned earlier, FVG comprise from three candles, and also FVG means the imbalance or gap between upper shadow of first candle and lower shadow of third candle. And in this instance, let me grab the rectangle from here to draw the FVG. From this point, I mean the highest point or upper shadow of first candle, we will draw it till the lower shadow or lowest point of third candle. I mean this point. Well, this is our FVG. Let me add the FVG. So there is two types of FVG. I mean bearish or SIBI and bullish or BISI. And as we can see, this is an uptrend and the price is increasing, so it is a bullish FVG or BISI. And also FVG has three levels: IOFED, CE, and FVG Fill. And this instance we can see that next candles touches the FVG by their lower shadow and candles, so it is CE level or consequent encroachment. And we can see that after retesting the FVG level by CE, the next candles are going higher and higher, and the uptrend is keeping its flow to increasing the price. The second instance is from Bitcoin market, and as I mentioned earlier, FVG is compromised from three candlesticks, and also FVG means the imbalance or gap between the upper shadow and the lower shadow of the third candle. And also in this instance I want to talk about this FVG, and let me grab the rectangle and draw it for you to grasp information properly. So this is the highest point and this is the lowest point. Let me expand it, and this should go a little higher. So this is our FVG, and this is from the lower shadow or the lowest point of the first candle till the upper shadow or the highest point of the third candle. And as I mentioned earlier, there is two types for FVG. Either it is bearish or SIBI, or it can be bullish or BISI. And as you can see, this is a downtrend and price is decreasing, so this is a bearish or SIBI. And also there is three levels for FVG: IOFED, CE, or FVG Fill. And as we can see, it is the FVG Fill, because in next candles we can see that candles are completely filling the FVG. And also, as I mentioned earlier, there is two results after FVG Fill, and in this case we can see that after touching and filling the FVG, the downtrend of market is changing to uptrend, and also the price is increasing with sharp steep, and it means that the market was so sensitive and reactive to FVG. As I mentioned in all of my videos, trading is so similar to mathematics, and you cannot be a professional trader just by knowing about, for example, FVG, support and resistance, or candlestick patterns, or just memorizing them. No, it is so much similar to mathematics, and you should go for it. And you should, for example, in mathematics, you solve the problem to memorize the formula, and at that point you will be professional. And in trading, you should analyze and read a lot of charts daily and hourly, and you should practice and rehearse it if you want to be a professional trader, and if you want to make profit from this career or science. It is better to call it science, because trading is compromised from several parts, several formulas, and if we look at this science from different aspects, we can see that there is too much information to know about. Thanks for watching the video. If you have any questions related to trading or FVG or pullback or support and resistance, and anything about trading, or if you want to be trader, you can ask me in the comment box and I will answer you as soon as possible. Hope you enjoy my video. Have a great day. Bye bye.